expenses. And it also helps us with our cost of readiness and understanding the cost of readiness, and as you begin to answer some of those questions with the volunteers. Just remember too, there's going to be lots of resources available, lots of hand-holding through the process once you start asking for that, lots of questions. And the reason why we're here is because EMS understands when you ask a question, whereas CMS may not quite understand what you were trying to say, and sometimes we don't articulate it well enough, so they're just answering at face value because they don't have the historical. A lot of us are saying, oh, no, that's not what they meant. Here is what they were trying to say. And so we're also working with CMS. So tomorrow the webinar will be pretty interesting as questions come around, and as CMS says, we're going to have to get back to you on that. Can you email it to us here so we can get back to you on that? And then a lot of times we'll work with them to make sure they really understand the context behind what the question is to make sure they're answering it appropriately too. So salary is probably going to be the biggest nuance, and especially if you do volunteer. After the break, there were several people asking questions specifically about the salary, and we're going to really make it as easy as possible to continue making sure that if you don't, on a minimum of an annual basis, and kind of run it on the 20/80 principle, you'll see that in the tool that they'll talk to you about being the 20/80 hour principle is kind of what you look at if you're, especially on the volunteer basis, to try to get back to, are you paying them at least minimum wage till you understand which category to put them in. Okay, so if you're doing volunteer, we do understand that that is going to be a nuance. It has been our concern since 2008. We actually commissioned studies on it to make sure that we allocate the volunteer labor correctly. Because if we don't, we will underreport as an industry, especially when you're doing aggregate reporting. So now let's move into facilities. Now it doesn't matter whether you're a volunteer, what have you. This is just making sure you're categorizing this correctly. And as you notice as we go through the sections, folks, again, the importance of how you have worked on your 855 or in the PAYCO system. Your facilities is another one that will be correlating with your practice locations, okay? We have talked about this as well, and we'll probably do an extensive dive into the 855 because as we've gone around talking to a lot of people, there's been lots of aha moments. And we probably need to make sure this gets cleaned up as an industry before it is uncovered by other governmental entities that might see this as a great windfall for them to try to recover inappropriate monies that are paid through the Medicare program. Okay, so there's a lot of things that we probably can do proactively as an industry to make sure that this happens. And we're really beginning to understand as we deep dive into data now, how there could be some unintended consequences through the process, and that's probably one of them. So most of you, unless you have multiple NPIs, which I think there's only one person in this room that does, under that NPI, you're going to need to understand how many buildings are associated with either your support services or your practice locations that you have, okay, that are used for that and that are assigned to your ground ambulance operation. Because there's a lot of governmental entities in here, what's associated to the ambulance units is important. So think IRS. Think when you are walking through the process of how you have to understand square footage and how much time. So say, for instance, on your personal tax basis, if you have a home office and you're officing out of your home sometimes, you might say, you know what, I've got 300 square foot that's associated with my office space, and then I can kind of work through that, the utilities and things. I think that concept is what they're trying to do here for the ground ambulance piece when it looks at facility-based and understanding your square footage. So if you have dual housing operations that houses fire and EMS, or police and EMS, or anything else, what square footage is assigned to the ground ambulance side? You're going to have to go that granular. Okay? So, and here's where the allocation comes in, partially used, and what is that percentage? So if you've got 5,000 square feet and 20% of that is for ground, that's what you associate it with, okay? And they're going to ask you lots of questions around that. So this is directly from the tool, and you're going to list your names of your facilities, okay? So you might have a maintenance facility. A lot of you have that, especially if it's a governmental entity that supports fire, police, EMS services as well. So it's the same garaging units, the same maintenance units that might do that. how much of that is associated with it. It's going to ask you if you pay rents, if you have a mortgage, if you own it outright, if it was donated to you, what have you. These are simple, pretty straightforward through the process and how you record that. And then they're going to want to know your square footage and then that percentage of that square footage that is associated to your ground ambulance unit. Okay? Now there's just three here, but it will be any. You might have 7, 8, 10 facilities that might be associated with your NPI. You're going to list them all and answer the questions on all of them. Okay? Any questions there? A lot of you are like, crap, that's a lot of work. They did recognize that in the final rule as well and in the proposed rule, but did understand the nuances behind understanding to get that information, to tease it out.
If I understand correctly, then us being a governmental organization, we're in our own facility, but are you saying we would list City Hall because they do our administrative stuff as a facility, and then the DPW guys, should they do our maintenance as a facility? Is that what I'm understanding?
Because you want to capture the cost.
I don't know about City Hall.
Well, the administrative side of it from the support.
I'll look, 'cause I think it specifically addressed that in something.
Oh, they did address it in there?
think so.
Let's look and make sure. I don't want to what have you, but somebody had a question.
So when you say allocate, do you mean you're literally billing EMS for some of this? Like, because if we're making an actual journal entry, no.
You're not billing. You are only assessing cost right now.
Okay.
So remember that remember the Balanced Budget Act of 2018 basically has mandated MedPAC, which is the Medicare Payment Advisory Commission, to actually look at our payments that we're currently getting paid for ALS, BLS, SET. And they're basically saying, are we paying them adequately for their services? Well, the only way to get at that is understanding the cost of providing the ground ambulance services. So allocating all of this for the ground ambulance is now going to then take all that data, and then they're going to go and rebase all of our relative value units that we get paid. So for ALS emergency, they're going to say, you know what, right now, for the Michigan in this geographic region, we're paying XYZ. Is that appropriate? So if your costs are more than the current reimbursement, they're going to increase. If it's less, then they're going to say, you see the issue. So if we underreport, then they could say we're paying them adequately, or we can actually take that money we're giving to ALS and say BLS is being underpaid, so let's rebase that, reallocate money. I will tell you, Congress thinks they're overpaying us. So, just FYI. We don't think so. GAO reports have said no. But remember, our data is only as good as what we put input into it. So there's no billing here at any time right now. It's just assessing cost. We need to get the cost data. Okay, we'll find the question about City Hall on that piece of and whatever, and we'll let you know. Then you're going to actually look at when you get into here, looking at total cost over allocation is the same concept, guys, that you're going to walk through the process. You're going to depreciate if you own them. If you do not have a depreciation schedule, they will have a place where you can click on and then walk through the depreciation so it fills in the numbers for you as well. So if you're not currently on a depreciation, most people should be. But if you aren't, because there are some that say, well, we don't know. I mean, remember, don't think about it conceptually, but there are 13,000 ambulance suppliers and providers in the nation. Some are very, 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 very small. Some still do things that in drawers or all their receipts or whatever, and they just give it to somebody, okay? So remember, those are going to be people that are going to be reporting as well. And so if you don't have a depreciation schedule, there is a way that you can click and walk through their depreciation schedule. If you donated anything, you do not report any of those costs for the donated facilities. If, for instance, you had a facility donated to you, you would just click that it was donated to you. And we're teasing that out too to make sure this is where it comes into to make sure we're comparing apples to apples. So for instance, if you have something that appears to be an outlier in the aggregate data, then they can do a deep dive to figure out, is there something in there that's causing that? Okay? And it could be, you've got donated facilities, so they can't compare you to an Acadian ambulance service. Does that make sense?
Our ambulance is separate from fire, different organization. building and not the shared
Yeah,
space, correct?
yeah. It would be a lease. And so you would record it here what you lease it as. Good questions, right? Here is some of the expenditures that you're going through the facility costs. It's going to ask you some exact questions here, and if you say yes to some of them, then it's going to prompt you through. So for your insurance costs, for your maintenance and improvements to your buildings, it's going to ask you to put that dollar amounts in there as well. So if that's not governed by you or what have you, and you've got an administration that does that, hopefully that they're allocating that to you and it's not under the, if not, then you need to make sure that it's being allocated to your EMS services, okay? Your taxes that you may pay on your buildings. Some of you may not. Depends on what your status is, okay? Any questions about this? So you're actually there, and it's going to be an aggregate amount. It's not like you're going to have to say, okay, I got a line item list certain things out. It will be just a total number that you'll put in. Now, most of you in your accounting systems probably already have a lot of this already line itemed out. But remember, it's just a number that you'll put in for each of those different when you're putting that in. Yes, sir.
We don't only have a mortgage, but would be a bond payment every year for facilities. Would that be considered the same, paying interest on it?
Correct. So he's asking that they don't really have a mortgage or anything. It's a bond payment. Here is the issue. If it doesn't fit into one of those categories as far as if you're lease or renting or it's a mortgage cost, you'd probably put it under either the rent or the owned. You just don't need to put it into two different items. Does that make sense? There is an area to talk about bond payments when we talk about other cost as well is where I would suggest that you put it. But for instance, if you're going through this and you're like, I'm putting it in here, it's rents to me, just don't record it in both places. But there is a place for you to do that. It just is not under facility. And I would recommend you, if it's not leased or owned, you put it in under the other. But if you by chance make a mistake and do it, just don't input it in both areas.
So for the next slide, which is asking about sectional utilities, if you have a building that's shared between fire and EMS, let's say utilities are $10,000 a year for the total facility, and you decided that EMS was 80% of the facility, would you just put
80% there.
of that 10,000?
Absolutely. So remember, CMS is not mandating what your allocation rules are. Whatever you've developed, you need to consistently apply that across the board. So if you've determined, 80% of all my costs are associated with EMS based upon your formulary that you can justify, then that is what you use across the board. But you can't say, I'm going to use 80% here, 100% here, or whatever. Your allocation rules need to be justified. Okay. So now let's talk about your depreciation piece of it. We kind of went through that. Most of your capital goods are going to be depreciated. Your vehicles will be depreciated. Your facilities will be depreciated as well over time. If you don't have use your depreciation schedule as you currently have in place within your organization. You do not need to change that. Just be able to follow that depreciation schedule. If you do not have one, they will have one, and it'll fall in that 4-year. I think it's the 4-year depreciation schedule is what it uses in the tool. But whatever your depreciation schedule is for your organization is what you should be using. Okay? So let's talk about vehicles, because this is where a lot of people, because this is where you're going to have non-ambulance and ambulance response vehicles that you will record, and there is going to be a section for you to do that. So first of all, remember we're talking about ground ambulance vehicle costs. So first of all, we're going to talk through the ground ambulance side. And so directly from the tool is if you own, they're going to ask you if you own, lease, or rent. And then depending upon how you answer that will depend upon the questions that you answer. And it's going to ask you, did you use this to transport any patients in the year reporting? Okay? If you did, then you're going to say yes. Okay? And then do you own it? How many do you have? So if you've got a ton like we do, this is going to be a quite interesting spreadsheet. You know what I'm saying? So if you've got 500, 600, 700 ambulance, you're going to record them. Okay? The majority of the industry has less than 6 ambulances, so most of them will be doing 6 or less here. Okay? And you're going to kind of go through the process of asking all the questions related to each ambulance that you own. Okay, was it donated? What was the annual depreciated value of the vehicle? If you don't have that value, go to the depreciation worksheet. Okay, so if you're not sure, there is a worksheet available for you to fill out, and it will do it for you. Okay? Did you remount it? Remounts are becoming a thing again. So if you remounted it, it's going to ask you those questions as well, and the dollar value associated with it. If you know, then it just takes you on. It's an intuitive tool. All right, and then what was the cost to your organization for that remount if you do remounts? If you don't do them, it's not going to ask you the questions. Depending upon how many units you have, it's going to depend upon how long it takes you to fill this section out. And while we're saying this again, can't repeat it enough, these numbers, if they decided to do a checks and balance against your Payco system, should match. All right? So I would make sure Paycos is updated first before you complete your data collection tool. Does that make sense?
If we have a truck, we buy a truck in June 2020.
Okay.
Do we have to report that or not?
When's your fiscal year reporting?
January to December.
So you're doing January to December and you buy a truck in June. Yes, you would. Any purchase that happens in the year of the reporting period, you will put in here. If you transport patients with it. Now, you can buy it, and if you're not transporting patients with it, then you would say, because remember, the first question it's going to ask you is, did you use it to transport patients? You're going to say no. And then it's going to prompt you through, it won't ask you some other questions. Does that make sense? But you will actually put it in here.
It does, but previously it was said what is on 1/1/20 is what you report for the entire time. So in this case.
So in this case, no. Remember, that's only when you're looking at salaries.
Okay.
To understand if he was a basic on January the 1st and became a paramedic on July, how do I change midstream on an annual reporting for the salary of an EMT? It only applies to salary and labor. Okay? So you would just use whatever category they were on January the 1st. So if they were an EMT basic on January the 1st and they changed to paramedic, you just use EMT basic and plug their salaries in for EMT basic. On vehicle, no. If you purchase within your reporting year, you are going to put it on here. And then depending upon how many you have, depends on how many questions, you're going to repeat this cycle for as many ambulances you have. Okay? And it's going to ask you owned, leased through the process. You're going to kind of go through whatever. So it's going to ask you through the remounts when you own it as well. If you lease it, then it's going to ask you your lease cost. It won't ask you some of those same questions. So if you have a mixture of owned and leased, then you're going to have some questions that are going to go to ownership, some questions that are going to go to lease. If all you do is lease, then it's only going to ask you the questions related to leasing a vehicle. Okay? Some people are y'all leasing as well and owning? Probably a mixture. It depends on how your organizational type works through the process. Okay? Now, non-ambulance vehicles, that's going to be anything that is not a current licensed ambulance vehicle in your state. Okay, so technically most people follow the same parameters. They've got to be able to house a patient, transport a patient in a stretcher, yada, 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 yada. Then you've got non-ambulance vehicles, and here is some of examples of what those would be. Okay, you might have wheelchair vans. You might have marketing vehicles, executive vehicles for if you're a fire chief. You might have a vehicle that's provided to you. Fleet maintenance, supervisor vehicles, fly cars, gators, motorcycles, I don't care what it is. You might have some type of vehicle that's non-ambulance related that's going to help and assist in patient care. Okay, and this is how you're going to actually work through that process of understanding what you're doing. So what type of vehicle it is it? And it will be like a pull-down menu, and you will check which one it is. Okay? Yes?
Echo. What's an echo classified as? Because back there you said license, but then on here it says non-transporting ambulance. Right there. Is it considered a fly car, or is it because it's licensed as an ALS ambulance, or an ALS rig?
Non-transit.
No, but it's a non-transport. So it might be licensed as a rig, but is it licensed as an ambulance in your state?
Non-transporting.
Non-transporting. So it's going to be a non-ambulance vehicle. Okay. If you do not bill it, I guess the easiest way to do it is if you do not bill it for reimbursement to the Medicare program, consider it a non-ambulance. That's the easiest way to do it. Okay? Yes, ma'am.
So we have a number of, we run an ORV, we run snowmobile rescue. My question is, the tow behind toboggan for our ORV and snowmobile rescues, would that be in this category?
Yeah.
It's not a motorized vehicle,
No.
but it is something we do use in support of our.
You can use it. Remember, it's going to be part of a response. Remember when you get into that when we said the questions regarding the responses and it talked about ambulance and non-ambulance responses. And if you're using her example was something with the toboggan or whatever it was to go find the patient and get out to the patient. I mean, we do the same thing in the swamps. Like we'll get in a boat. Whatever, even though it's not a lot, whatever, we can still use it as a non-ambulance response because our paramedics may be having to go out there and assist the patient until a helicopter can land and take them off. That could be a part of the non-ambulance. This is where we're getting at the cost of readiness of what we're doing and the costs that are associated with our services that currently aren't being factored in the reimbursement of what I'm billing. That makes sense? So this is another way we're getting at cost of readiness. And so understanding this piece is very important, and they don't have everything listed in there's going to be another category because they're not teasing out everything that might be associated with that, and you'd put it in that other category.
So would we also include, say, engines or tankers, fire apparatus that responded to a car crash where we transported them?
So that'll be a part of your response. You can have the non-ambulance piece of there because that'll tie back to it, that you provided that response to that. And then you'll have to allocate what was associated with your ambulance response to it. Okay? So if you're sending out a rig to every call or whatever, is that 20% of the time? You know what I'm saying? Whatever allocation that you're using, theoretically, they're going to allow you to put that in there. Okay, and it's going to start to ask you through some of these questions as you do the drop-down menu. You'll do see other vehicle that's licensed through it. It's not going to let you use, at one time we kind of talked about, like in New York City, sometimes people will use horses, different things like that. It will have to be a vehicle as well, and what would be considered kind of a motorized vehicle. So some things that you won't be able to use if it's not motorized. That may be a thing or whatever, but it will allow you to put that other vehicle, and then it will start to ask you questions. Was the vehicle used to respond to ambulance calls or support ground ambulance operations in that calendar year? It's going to get to some of the questions that were asked. If we do this, what it was, yes or no. And then it's going to ask you, was it donated, and then what was the annual depreciation over that? And if you don't know, you can kind of work through your depreciation work piece as well. And then it's going to ask you, here goes to her, the lease. Fire truck, same concept, owned and leased, if you do that. Very important. As you notice, if you own, a lot more questions. If you lease it, basically 2. Now, here is where it's very, very important. You're going to have to do this both on ambulance and non-ambulance as we go through the process, is understanding the total number of miles that you used. Okay, here's where we're getting at the cost of readiness again, folks. So it's not loaded miles. Currently, how we get reimbursed by most payers is basically on the loaded mile. So when the patient's in the back, we transport loaded miles. This is very simple. You should be keeping whatever your odometer readings are at the beginning of your calendar year or fiscal year to the end of the year. So if you started at 5,500 miles on January the 1st and you ended at 100,015 miles, that is what you're recording, all loaded and unloaded miles for both ambulance and non-ambulance. Now, if your vehicle does not have that you're using an odometer reading, you would not fill that out. Okay, because like a Gator or something like that might be motorized, but it doesn't have a odometer reading or something like that for it, you would not fill that out. But for those that do, especially, it's very important on the ambulance side of it that you record those numbers and you tie it back. Okay, and it would be on the whatever. So if you have a unit like 51 and you change it out mid-year and you replace it with another unit, it would be on the aggregate. Okay, so when you're looking at whatever, so you would report all loaded miles and unloaded miles at that time. So if it was 5,000 miles that you had, then you replace the unit and another 10,000 miles on the new unit, you would combine them together and that's your total number. Yes, ma'am.
Okay, I'm going back to depreciation.
Sure.
It says, what was the annual depreciated value of the vehicle? So, the vehicle's 6 years old, it's fully depreciated. Are you still putting a depreciated value in, or it's
Zero.
at the time?
It's at the time.
Okay.
It's at the time.
What was?
Yeah. It's at the time.
Okay.
So especially if you've fully depreciated it out, technically, I mean, whatever your depreciation schedule, if it's 4 or 5 years or whatever you're at, if you fully depreciated your vehicle out and it's 6 years old, zero.
Okay.
Good question. Thanks for asking that. We should have clarified that. Somebody else had a question. Are we good? That answer? Okay. Leased and owned. Now here's where you're going to go with the other associated costs. So if you're in shared services, remember the allocation rule applies. Here's where the percentages all go through the process. So this is where it's going to go through. If you answered shared services, remember under the organizational type, if you said yes, you're going to have to fill this out. If you said no, it's just going to assume 100% on everything. That makes sense? So this is where some of us will see this, some of us will not see it, depending upon how you answered the questions on the beginning. So if you answered yes, we share services, then you're going to have to go and figure out how much of my fuel was attributed to ground ambulance, fire trucks, land rescue vehicles, water rescue vehicles, other vehicles responding to emergencies but not designed to transport patients, which is like your ATVs, different things like that that you may pay fuel for, and other vehicles. Okay? So if you answered shared services on stuff, what is the percentage of fuel through the process? Please report all your maintenance costs with all of this. Okay? So if how you answer the questions is going to determine how you put those percentages in. Other costs associated with it, this is going to be on the aggregate number. So most of you might itemize this out already. In some of your accounting systems or whatever, you just lump all that into one number, registration, licenses, insurances, things like that. So if you spend $500,000 a year on that, your number's $500,000. Okay, you wouldn't go in there and try to figure out you'll need to understand what your aggregate reporting number is. Any questions about the vehicles? Because salaries and vehicles and facilities are probably going to be the majority of our costs.
So for the maintenance, so we use a outside company to do the maintenance on our vehicles. So I have to figure out, like, if he sends me 2 bills and one's for an ambulance and one's for the fire truck, I can just use the ambulance bill.
That's correct.
Would also include the fire truck bill and as a percentage of our.
That is correct. So if the fire truck is used 20% of the time for ambulance stuff,
Then I can use
then
20% of the fire truck.
that is
bill.
correct. That is correct. Good questions. Any other about this? Make sense? Well, it makes sense, maybe, maybe not. Ha. Okay, so let's talk about our equipment, consumables, supplies, our capital, our disposables as well. So let's first go through this. As you're going to see in the tool, it's breaking it up and doing it in the aggregate. We really lobbied very, very hard to try to really tease out high-cost drugs, different things like that. We won some, we didn't win others, just because for future payment reform, it's been an argument our industry has always had, that we should get paid for additional things like hospitals doing things like that. So you're going to actually look at depreciation first. So if it's new equipment, new stuff like that, you should have a depreciation. Once it gets older, you're going to have your cost over time. You're not going to have any, okay? So really working through that process is going to understand how this does. Your maintenance, certification, service costs of that, you're going to put that information in here. Okay, how much money you spend on your consumable medical equipment. and what percent is allocated to the ground ambulance side. Okay, so if you're in a shared services model, where you're sharing amongst fire, EMS, or what have you, you may not have 100% allocated to the ground ambulance side. So whatever allocation rules you are using throughout the process, you need to be consistently applying that with all your costs. Okay? And some people have different schedules. I mean, you might have a salary schedule that does one thing, a consumable schedule that does another, because you've really got down to the finite granularity on that. As long as you can justify it and prove it, that's what you should be using. And that's what I would suggest you use to get at more accurate, because just a blanket allocation rule sometimes is not the best way to go. So other non-medical type of equipment, so all of your like computer equipment, dispatch equipment, things like that you're using, that's not necessarily patient care related on the front line, but it is part of the process of supporting patient care. For ambulance, you need to utilize that. Uniforms, office supplies, and you'll see some breakout in the uniforms as well. So when you're looking at non-medical and the percentage of uniforms is because they do understand the difference that you might have fire uniforms and EMS uniforms. You're starting to see a general theme, folks. You can only allocate according to whatever you use for the EMS services. Okay, so if you might have a uniform that's consistent across the board and you're a fire EMS system and they wear the same uniform, where you can only allocate, if you're saying 80% of my work is ground related, then 80% of the cost of the uniforms can go to EMS. Does that make sense? And then all the same thing with your non-medical supplies, depreciation, and this is for what you actually purchase. Now there's restocking things and things like that we'll talk about. You're going to see that in another category to put all that in there. And there was a question about that. Now here's where the contracted services come in. And you have got specific areas where you can fill out contracted services. Remember, if you were like, I put that in another portion of it, it's okay. Just don't put it in both places. Okay, we prefer you put it in this place because it keeps it consistent. But if you make a mistake in that first year, just don't put it in the same place, whatever, so you're over-reporting. Okay, so contracted services are typically like medical director if you contract those services out. Not that you pay them or they're volunteer, but you contract them out. Your billing services, where you pay your percentage, usually those models are you pay a percentage of what they collect. For those billing services, that portion that you pay to them is what you would put in here. Accounting services, a lot of times people outsource their accounting services as well. If you're in a shared services model, this probably is going to be like a paper type move. Where they should be charging you, and it might just be a paper shift where it's saying we're charging you $100,000, and it's just on paper to show you need to make sure that happens, especially for you that the county may be running a lot of these administrative services. Vehicle maintenance, repair service, dispatch, if you contract any of these things out, this is where it goes. Okay? It doesn't go in where we were talking about the vehicle maintenance and all that. If you contract out all your vehicle maintenance, you don't put it in that other area. This is where you put it, what you pay when you contract it. If you do it yourself, then you fill out where it's under the vehicle. Does that make sense? But if you mess up, it's okay. Just don't do it here. Just leave it under where you put it. But technically, this is where that goes. Somebody have a question? We good? Okay. So now here is where it actually is on any other cost that they have tried to associate here. Oh, stop going over that way. I'm sorry. I love to walk and he's telling me don't do that. Thanks, Kobe. So here is where you're going to kind of go through all of those categories, and basically if you say yes, it's going to ask you for the numbers and the percentage. And you're going to see every category that we have tried to make sure, when they did the stakeholder engagement, that they tried to capture everything as close as what we usually do as an industry. And then you'll see other miscellaneous operating expense. Just remember, anything you put in that other miscellaneous operating expense is hard to tease out. Okay? especially when we're going down to granularity and when we actually really go into trying to rebase and do a correlation of apples to apples. So anything that you see medical related, so biohazard, waste removal services, just an example, advertising, if you've got board overhead allocation, funds paid to other ambulance organization for services. This is where we talked about where you might have to pay somebody else to do the ALS, what have you. This is where you're going to record things like that. Events, like if you came to a meeting like this, you can use that as a cost. Education, your IT, software, licensing fees, anything related to that, you're going to put that in here as cost. Fines that you may have to pay. Business registration related fees. Your compliance, regulatory, if you're an accredited agency, you have to pay accreditation fees. You can write that off. Fees that you may pay to a local jurisdiction as a condition of providing ground ambulance services. This is where you record that. There's lots of arrangements across the nation where you do that. Physicals, recruiting type stuff that you might pay. Here's where it is. There's also some people that go through elections, and there might be all of this like anytime there's a new mayor or new elected officials in an area, it could be that there's a cost associated with that. In some states that we went to, it could be almost $500,000 every time there's a new election cycle. Where they're reinstalling or what have you. This is where you would put those costs and expenses that are related to that. And then anything that doesn't fall into these categories, guys, is going to go under other miscellaneous expense. And then it's going to then start to ask you through what the dollar amount is, and then as you can see, what percentage of the expense is attributable to ground ambulance services. Okay, so it might be 100%, might be 80%, 50%, whatever it is if you share services.